This is one of my favorite people we're going to bring up. Can't say Darren McGo because we went to college together, so he's a favorite person. But I love this Marty guy. Marty comes from Digital Farms. He's a really interesting guy from Indianapolis. I had the privilege of going to the Indianapolis 500 last year in 185-degree weather, and I don't know that I'm exaggerating. It was truly the hottest place in the universe I've ever been to. Marty has a lot of experience in the data center space, and I hope I'm not getting this wrong, was part of a $1 billion REIT. Really a smart guy, a CPA, a real estate expert. Sometimes we get a little serendipity. We met him through Bitcoin, and now we're in the data center space with him. This is a committed asset. We've talked about spinning this off to shareholders in 2019. Let me give you a really quick update. We are going to spin this off to shareholders. The amount we're going to spin off, we don't know. There is a Form 10 ready. We haven't filed it. The audit will be complete in April. Once the audit's complete, we'll file the Form 10. We do not know how much we're going to dividend out to shareholders, but if you're a shareholder of DPW, you are going to get shares of Digital Farms. That is our plan. That is our intention. DPW will hold back some of them because we like to retain some of our investment. But I love this company. This is the former Super Crypto. Without me babbling on, here's Darren McGo, the CEO of Digital Farms. We have David Katzoff, the CFO, in the audience, and Marty Schrader. Thanks.
Thank you, Todd. Good morning. As Todd said, I'm Darren McGo. I'm the CEO of Digital Farms, Inc. You knew us as Super Crypto Mining in 2017, 2018. And we're a company of DPW, more specifically a division of DPW Financial Group. And we have 15 minutes together today, so I'm just going to take some of that time to talk about when we were formed, how we were formed, the purpose behind that, how we evolved in 2018, and then we're going to get into, spend most of our time on where we are now and our vision for 2019 and beyond. I wanted to start by just asking for a raise of hands of how many people in the audience have invested in cryptocurrency, familiar with Bitcoin, or involved in that at all in the last 2 or 3 years. All right, perfect. So this will be a relatable topic to most of us. It'll be a fun conversation. Talk a little bit about the evolution. So in 2017, DPW, the parent company, made significant investments in mining rigs to the tune of millions of dollars. In 2017, late 2017, I was asked to help kind of support the team and make sure that those investments were managed closely, that we leveraged every opportunity we could within the crypto space, and that there were no rocks unturned. So in early 2018, we formed the company Super Crypto Mining. We put a team behind that, and we started to look for locations where we could place our miners. Locations across the world, really. We focused in California at first, so we become familiar with the process. We got to understand the space. We got to realize quickly that data centers were trying to support crypto mining, but really weren't set up to do that. Machines run very hot. They take a unique setup, so it's tough to run those in an internal system. We were able to connect with some partners as we were networking that helped to guide us. 2 of those folks are here today. Helped guide us to a facility in Indiana that we did our own build out, and we were able to set that up with hot and cold aisles and run the machines the way we wanted to at a low cost for energy and a large capacity for energy. We set the goal to have over 10,000 miners by the end of 2018, which at that time was a realistic goal because Bitcoin pricing was dancing around $19,000, $20,000. It was easy to raise capital, to buy machines, and deploy those machines. The company leveraged relationships that we had with sister company Cool Assist. They're in the power business. You're going to hear from them today. Understand that they had a power supply that served the crypto space. And so we leveraged that, and also supporting blockchain equipment. So we set up a division that would operate to the consumer market and sell retail, both the power supply through Super Crypto at the time, and then we also leveraged the relationships in China to be able to create our own miner. Anya, thank you. And so we offered that through a retail channel. And then we had a lot of people inquire about how they could get involved with mining. And so we did a small cloud mining offering to curtail some of our energy that we were using, some of the power from our machines, and make those available for a small investment. And people could use that to experience crypto mining. Now, you know, in 2018, crypto started to crash. And so we had to evolve as an organization. And we did that by searching out low-cost power, rechanging our focus and evolving as a company. And we realized after purchasing a dam in New York that the person that controls power at an inexpensive cost is really king. And so that is our focus for 2019. We want to be able to have real assets, real estate, facilities. We want to be able to support large computing. So we've begun to seek out low-cost power, large capacity, low-cost power. We want to own that asset in 2019 and beyond. And we want to do that in a couple ways. We want to leverage strong partners and experts in the field. And we're going to introduce two of those folks today to talk about a specific target that we're working on now. As Todd had mentioned, we're going to close on that probably next month. We're also making moves with our current relationships that we had established in 2018. We're exiting those agreements and we're moving our miners to our least cost power, right now in Indiana, eventually in Michigan. Machines are still running. We're monitoring those closely. We have about 3,000 miners, so short of our 10,000, but it was a smart investment or a smart decision not to keep investing in equipment, especially because of the changing markets. And we turn those machines on and off depending on the difficulty level of the mining, the price of Bitcoin, and of course our power costs. So we'll be shifting our machines and continue to exit out of the current relationships. But we'll remain positioned if the market changes to turn those machines all on, to even buy more machines. We've really learned a lot about this space and we become experts in many areas. So we can turn back on cloud mining, we can add more equipment, but we really want to be positioned to be able to help people execute on their plans with machines as well, with real assets. We want to be positioned also to focus on mainstream blockchain. Blockchain's here to stay. We want to have high computing, a lot of power, and the ability to support things like artificial intelligence, with autonomous vehicles, rendering farms, anything that takes a lot of computing power. And that's really where we've positioned ourselves today. We have an exciting opportunity with Digital Farms Management LLC. We have two gentlemen here, Marty Schrader, Jay Looney, who are helping us. They've helped identify our first location where we're going to move our miners and operate them. It's a large facility and it's an exciting opportunity. So we wanted to invite Marty to come in today, and this is Marty Schrader. I'm going to invite him to come up and talk a little bit about this first real estate asset, how we're going to position it within the Digital Farms company, how we're going to leverage our current assets, but also create an opportunity for us to do more.
I do want to add something to Darren. Marty, hop up there, and I just want to add something real quick. One of the things, there's a lot of people, you've heard Buffett's comments about heirs of omission, heirs of emission. We set out to buy 10,000 miners, install 10,000 miners. Probably the greatest unknown decision was Darren being in my office every day saying, stop buying miners. We're going to get killed, right? People don't realize, they think, well, you failed, you didn't get to 10,000 miners. I can tell you that if we would have bought the other 7,000 miners, we would have went bankrupt. The cost of those miners was so high, and the precipitous decline of the value of those miners was so severe that not being able to complete that last 7,000, and in fact, some people have seen that we have a dispute with one of our creditors over it. It was probably the single decision that allows us to stay in business today, because we were going to deploy a lot of capital to this space. We put about $10 million in this space, and we're still here and alive, and I can tell you a lot of others are not going to be there. So Darren's decision to beat me up every day about this probably is something that has not been really testified to in terms of people understanding that single decision allows us to fight another day. We still believe in Bitcoin mining. We still want to be there in that space. We will deploy, but a little smarter than last time. Go ahead, Marty.
Sure. So thanks everybody for being here online and in person. When Jay and I first met Darren and Todd and Crypto Joe, it was in the form of a vendor. We arranged for their immediate needs to deploy about 3 megawatts of power in under 60 days. And it was a pretty amazing process, actually. But in the midst of all that, Jay and I looked at the fact that the existing facility in Indiana that we deployed them into wasn't going to be sustainable for their growth. And if they'd have gone to 10,000 miners, we would have had to have found more sites, more cost-effective, more geographically diverse and whatnot. So we immediately started looking at opportunities. Jay's been in the data center business for over 20 years. I've been in the commercial real estate business and for over 25 years, and Jay and I have been partners in deals for over 10 years. And we started thinking about the future, knowing that we wanted to get back into the data center ownership business. And we kind of sought out a first opportunity. It is in Michigan, as everybody mentioned, and we had a handful of criteria that we really wanted to focus on. The Bitcoin and mining operations are interesting, but they're only a part of the story. We didn't want to develop a business that was reliant on Bitcoin or mining or anything else. We wanted to be able to accommodate it, but more importantly, survive without it, which brought us to this first facility, whose key characteristic is very affordable power costs. The second key characteristic is we view it as a three-legged stool. It's a 600,000 square foot building. It's on 35 acres of ground. It's got enormous power capacity already built to the facility. It has enormous natural gas capacity for cogeneration. As Jay likes to joke, it has a 14-acre roof for solar installations if you wanted to go that direction. And it has positive NOI right off the bat in place today. So the idea behind the facility is we can develop a section of the facility to accommodate DPW, super crypto, digital farms, mining rigs at cost, basically, at e-cost.
Get a little closer to the mic.
Sure. I'm not a big public speaker.
That's okay. You're great.
So anyway, so we can develop a portion of the facility to allow those miners to be turned on at much lower Bitcoin levels and still be profitable. That's key for Todd and Darren and Joe to be able to be sustainable in that space and utilize the assets they've already bought. In the meantime, we have the ability, because of the power capacity in the space, to develop an enterprise data center. Not a huge one. It's a tertiary site, but that's okay. The world needs tertiary sites. And the world's moving far more towards edge computing. You either have hyperscale, the giant Amazon, Microsoft, Google data centers. Everything else is moving to the edges, where the data is captured, consumed, utilized, etc. So we like that. And then the third leg of the stool is we have a commercial real estate business of nothing more than warehousing, storage, light manufacturing that more than pays for the asset. Any one of the three makes this asset work. Two of them makes it very profitable. All three of them, while providing benefit to Darren and Joe, can make the deal very profitable, in our opinion. We have a great deal of experience in the space. We understand the asset very well. So we're really excited about it. It's going to be a great opportunity. And what we view it as is the first of several opportunities. And actually, when Jay and I leave New York tomorrow, we're headed to the Carolinas to finish putting under contract a enterprise data center that's a sale leaseback to a publicly traded telco. Profitable from day one, works perfectly fine with just the telco as the only tenant, but the capacity's there to 6 times, Jay? 6 times? What power they're consuming. But the deal works in and of itself with just the sale leaseback. You can see some of the specifics about the facility in Michigan. There's nothing about the Carolina deal in the slide deck, but we've got ample clear heights. It was a former copper manufacturing facility. So it's a 600,000 square foot building. It's fully secured. It's got great ceiling heights. The building's actually in tremendous shape for what it is. We have 3 separate substations owned by the property on premises, which is tremendous. Comes with a private rail spur right off a main line from Detroit to Chicago with an internal 3-car rail dock.
I just picture miners in China putting all their machines in cargo containers and putting them on a train and sending them to us.
Yeah, and one of the plans is after we deploy the first 3 or 4 megawatts for Darren and Joe at cost, the real play in the blockchain space is to lend off of their relationships and bring in other clients that are more profitable for the property itself. That's kind of. So, as you guys are probably mostly well aware, the data is increasing exponentially. The demand for data center space is increasing exponentially, and it's also starting to spread out into multiple locations. There's a thesis out there that we subscribe to that the old model of building tier 3, tier 4, the super secure, impenetrable data center Fort Knoxes of the world is going by the wayside. It's becoming a lot easier and a lot cheaper to deploy multiple lower tier data centers that are redundant than it is to build the Fort Knox of data centers anymore. Speed of communication, resiliency, and those things are driving all of that. We're also very interested in some other options that we're starting to look at around autonomous vehicles, artificial intelligence, the high-density compute needs that revolve. Bitcoin mining was a great driver to learn how to handle a lot of those requirements, but the crypto mining, whether or not it ultimately survives, is irrelevant to our business model because we're really in the data and client business. So that's the idea. Questions? Does anybody? Yes, sir.
Okay, so now you have this big facility. The data center on the cutting edge is great. I think that's a great way to go because the blockchain is. I want to understand a little bit more of the blockchain. That's because of the blockchain and everything moving, or is it because of 5G? Why are you?
It's more 5G. Well, as far as the edge computing, what's happening is the amount of data that's being created and has to be captured is so diverse, and the key to it is to capture it and get it into the ground as fast as possible. So what Jay has a theory that what you're going to end up with is ultimately data centers like McDonald's. They're going to be on every other corner. Because that's where the data is being captured, it's where the data is being delivered. It's so scattered that you can't do it from a centralized location as efficiently. So if you're able to get it out on the edges and then into the ground, into the pipe, process it, and right back to where it needs to go, that's kind of the future.
Are they doing that now, or are there other companies doing that now?
Starting to.
Just starting.
Especially with autonomous vehicles. You haven't had that information scattered everywhere.
Yeah,
like cell
smart
towers.
cities, and I mean, there's so many different things. It goes so far beyond.
So it's like the data towers. You're going to try to
exactly
make a nice name for it. Okay.
Exactly.
And the blockchain is the other question. Where are you? Is the blockchain just for mining, or there's
no? It's going to evolve way beyond that, and there's.
That's what I'm trying to tell you guys.
I have an analogy that I'm not going to do on a public. I'll share it with you offline.
Okay,
but the gist of it is, the mining is interesting. It's the first way that somebody figured out how to monetize a really interesting technology. Very similar to the first time you saw a search engine. You weren't in the internet. You weren't really sure exactly how this was going to turn out, but you knew it was really cool. It was really going to be useful, and this was going to stick around. Blockchain is the underlying technology. It's phenomenal. Mining, cryptocurrencies are interesting. They probably have a place in the future, long term, but blockchain will evolve far beyond cryptocurrency in a lot of different ways. For example, there's pilot programs out right now with Walmart and IBM where they're tracking food production literally from the field to the table. They can tell you when you eat some bad salmon and get food poisoning, instead of 5 days to trace back the history of where did this thing probably come from, they can tell you in 4 minutes. It came from that farm, that box, that carrier, that store, that dinner. It's that kind of technology that's disruptive.
So I think the key is that we're diversifying, we're trying to leverage every opportunity, but remain positioned to execute on any changes in the Bitcoin or crypto space.
Thanks, guys.
Thank
Appreciate
you.
it.
Yep.
Thanks, Marty. Let me go back over Digital Farms for a second. What do we look like on time?
You're okay. You have a couple minutes.
Right. So we acknowledge that we have a Bitcoin-based shareholder base, and we want to be positioned for a surge in Bitcoin. So we will accelerate machine deployment if there's Bitcoin's higher than $4,000. Over the weekend, Bitcoin was at 41.87, and I thought we'd have a glorious rally into this week. But like all things you hope for, you have no control of that. I hope that all the people online and shareholders hear this message. A lot of people are asking me about a reverse split, which we do not want to do, but we may have to. We prefer not to. We think the company's undervalued here. But the New York Stock Exchange has given us till July 4th to fix that. I want to be clear, it's my intention, the company's intention. We believe we can put Digital Farms shares in the hands of DPW Holdings shareholders so that they have the closest thing to a pure play in the data center and Bitcoin mining market. I think what Jay and Marty are doing justifies more than 10 minutes of talk. Jay didn't speak, but if you listen to Jay, I've spent some time with him and had dinners and lunches with him. As you know, I don't miss a meal. And he's walked me through his vision of the data centers he's built in the past and what these micro data centers will look like. Someone's in the audience that I know pretty well who's also into edge computing, and we have relationships with Peter. And so I think that you're going to hear more and more about this, but it's important to note that we want to make sure that the shares of Digital Farms in some capacity are in the hands of DPW holding shareholders, and that they're rewarded with those shares so they can participate on a pure play basis in Digital Farms. And I hope everyone gets that message.